Hi, everyone. My name is Timothy Watts, and I'm here with Eric Icone. Chris Wargo was not able to make it, but we are Scottie Fetch. Now, envision that small business that's thriving in your hometown, that's been there for what seems like forever, that has to shut its doors, not because it's doing poorly, but because the owner just simply can't find the right person to connect into the business after they want to move on. This is actually a situation that has happened in my family, and it's happening across the nation and putting $8 trillion at risk of fading away forever. This is because baby boomers are retiring, as Dave mentioned. They have built businesses with successful cash flows that have become cornerstones of their communities. And if these businesses fade away, jobs disappear, legacies vanish, communities suffer, and those cash flows dry up. To prevent this from happening, the market has actually found that finding individuals, not corporations or institutional buyers, to take over actually preserves these businesses best. The biggest problem here is what you see on the screen. It is incredibly difficult, takes time, emotional energy, and is oftentimes filled with fear in the avenues that are available. The solutions that are actually been developed to try to address some of these issues, such as brokers or online marketplaces, are inadvertently just driving the prices of these transactions to a point where people cannot realize value since they are doing an auction-style sale. This pushes away buyers. So with all of the inefficiency in the market, the real opportunity here is not in buying a business or investing in this asset. It's in connecting these players quickly, efficiently, and without destroying that value. And if we can do that, we can tap into a much greater portion of this $8 trillion opportunity than is currently possible today. And that is exactly what Scottie Fetch is here to do. You see, we are a multimodal targeted matchmaking platform that brings together the buyers, the sellers, and the investors into one place to foster community, not replace it, which is a critical portion of these sales. Members can immediately expand their acquisition network by participating in forums, academic seminars, or even in the networking events, in-person networking events, where they can find the guidance and mentorship that they will need to successfully complete this journey. One of the key insights that we unlocked during our interviews was that professional services, such as lawyers and accountants, are actually some of the first people to hear about an owner's willingness to sell. And it's for this reason that we are going to keep a close network of these individuals across the nation, providing them a trusted avenue where they can guide their owners that they know back to us, that we can then make directed connections to the buyers that we have that can take over and protect these businesses. The final piece of the puzzle is that we will take away the question that's often asked in these transactions of whether or not an individual can afford these corporations by managing a syndicate of investors that can look at each deal individually and put capital into the ones they care about most. This way, they can back entrepreneurs and participate in the incredible returns that are present in this asset. Now, all of these pieces come together to drive a very critical thing: faster quality deal flow. We do this by creating more efficiency in the sourcing process and by reducing the risk of a broken deal. Now, the current options are just marketplaces that we talked about before, drive the value too low for people to actually participate in. Rejig is doing similar things to what we are suggesting, but they don't go far enough by providing a community. How are we going to make money? Well, we are targeting 100 successful deals and taking a 3% finder's fee of the enterprise value, which is an industry standard in this line of work, to realize $42 million in revenue by 2030. We are starting this journey here. The $25,000 is going to go to building this platform at CMU, bringing and onboarding the alumni network who represent the best possible buyers and investors in this space and proving out our model. We see this as a place to build the platform or create a pillar of entrepreneurial ecosystem here at CMU. We want you to be part of it. Thank you.
All right.
Yes.
I'm curious.
The investor syndicate that you mentioned, can you tell us a little bit more about that?
Absolutely. So I think the closest analog is the 99 Tartans community, that we want to host people who are interested in this asset, right? We want to be able to be the ones that guide them into small business acquisition. So very similar to 99 Tartans, we will present these accredited investors or even institutional investors who want to be a part of this with the deals and type of pitch nights where they are able to then back these investments.
But who runs the business then? If they sold it, who runs the business?
Absolutely.
The syndicated investor group isn't going to.
I understand the question now. So in this space, in the entrepreneurship through acquisition, the buyer is actually the general partner. Think of it as micro private equity. So the buyer acts as the general partner and the investors are the limited partners. So they will provide the money, the general partner then will manage that investment, and they will do the day-to-day operations of these small businesses.
That's the CEO?
Yes, correct.
Christine?
Yeah, thank you.
Yes.
How do you, when you say enterprise value, how do you determine what enterprise value is?
Thank you. So that's going to be the actual negotiated enterprise value of the deal. And that's going to be a process that will happen between the buyer and seller directly as they negotiate the cash flows and the potential value just in any similar acquisition. And then we will be able to support that, but then we'll take that enterprise value that they agree on as the final transaction cost.
Well, let me just follow up with that. As a lot of these deals, we saw 3 broken deals already. A lot of it is, oh, I'm going to buy it. Yeah, I'm going to sell it. I'm going to buy it. But then at the last minute, they choose not to. Right. And so there's kind of 2 things that I've seen. I'm sure you've seen many more. One is emotional unpreparedness to let go of the baby.
Yes.
All right. And that one you probably can manage through the process or get them to commit or put it in escrow. I don't know, some crazy thing. But the other one is, well, I thought it was worth $10 million, and this guy thinks it's worth 2.
Absolutely.
And bridging that gap is why most of these deals don't close, right? So of those issues, how are you managing those?
I think that is where the network of professional services comes in the fact that they will have close relationships, and if we can coach them early on in the process, telling them, here's what we are seeing for the businesses in your market, we can prevent the expectations from getting too high. And that they can then come to us as trusted sources. We're not trying to undercut them. We're not trying to, do the broker thing where we're promising them the best value possible. We're actually going to be working with them up front before they try to hit the market and be able to address some of those inefficiencies that you've just mentioned. They're big topics that we want to make sure we address.
Zach?
So you have the businesses, you have the buyers, and you have the financing, right?
Yes, correct.
The lifeblood is essentially the quality of the businesses. The most lucrative deals to attract the higher quality buyers and investors.
Right.
How do you ensure that you're getting the most lucrative deals and you're not going to get squeezed out by a more traditional private equity model?
It's a fantastic question. The main angle that we are leveraging as our competitive advantage is the fact that not every small business owner, because of the same reasons that Ed mentioned, wants to sell their baby to the highest bidder. They care about the legacy, and they want people who are going to take over that can actually take care of the employee base and their presence in the community. So we're going to provide them a fair value, but we're also going to be reaching out to the businesses that are interested in that and taking that segment of the industry. And we're going to be, again, leveraging our connections into the community to identify them. So we're going to try our best to avoid the private equity side of things with too high of transaction costs, but we're also going to be focusing on the ones that don't want to go to the private equity, don't want to go to the corporate buyers.
So that
Yes.
target audience, your target market.
Yes.
Inherently, those kinds of deals, in my experience, take a ton of hand-holding. They're longer, highly emotional. Have you thought about that from a cash flow perspective and how to sustain yourself while these deals invariably take longer to close and are smaller?
Yes, I will say that we're continually working on that because that's a big problem where a lot of this finder's fee in the industry comes from delayed interest. But what we are trying to look at is taking transaction cost up front.
Done.
Oh. Yeah.